If you're a buyer or seller in this market in the GTA and you think you have had control over your decision of either purchasing a home or selling a home, well, think again. We all know that the decisions that have influenced buyers and sellers over the last year and a half or 2 years is because of the control of the Bank of Canada. And the Bank of Canada, again, is dangling these two carrots in front of every buyer and telling the sellers, hey, listen, we know we really paused this market and we're going to change it again. We're going to intervene again and we're going to start this market for you guys one more time. So if you're a buyer or seller in Oakville and you're wondering how to start the process of either buying a home or selling a home, I've attached links for you to get in touch with us in our description. Or if you want a market evaluation of your home, get in touch with us. All the links in our description. Now let's get back to this video. The most important principle that drives the real estate market in the GTA has always been affordability. It's not supply, it's not demand. Look at it right now. There's a lot of supply of homes. However, the demand has been worse than it ever has been since 1995. That's right. Sales have never been this low since 1995. And if you look at the population increase we've had over these last almost 30 years, how is that possible? Only for one reason, and that is affordability. And who's controlling the affordability? Well, it's the Bank of Canada. It's not as if all of a sudden there are no buyers in the market. There are people in the market who need to move. Their life has changed and they need a bigger place or a smaller place to accommodate their life changes. There are people whose family sizes increased. There are people whose family sizes increased. Maybe there are some empty nesters. There are people who got married. There are also people who split up. There are some people who come into money. There are some people who cannot afford their payments anymore. So there's buyers and sellers always who have to move according to their changes in their life. However, all these decisions are based on only one factor, and that is affordability.
Bank of Canada to reduce interest rates by a further 0.5%.
Major mortgage changes coming into place for first-time buyers and buyers with high-ratio mortgages.
Over the past almost 24 months, how the Bank of Canada has controlled the market is by changing affordability. You see, most people in the GTA do not buy homes according to a price. No one says, I think I'll buy a home for 1.1 million or I'll buy a home for 800,000. People buy homes according to what they can afford monthly. The monthly payment is what dictates if someone's going to be buying a home or is going to be selling a home. So the Bank of Canada is bringing two major changes into the market that are going to change affordability. And by affordability, I mean by monthly payments. They're not affecting affordability by decreasing house values. No, they're not. They're not changing affordability by changing what land transfer tax fees are or what mortgage insurance fees are. No, they're not. They're only changing affordability according to what you will be able to afford that home on a monthly basis. So the first change is about the amortization increase for first-time buyers who are high-ratio mortgages from 25 to 30 years. High ratio meaning that these are the buyers who do not have 20% down. They have either 5, 10, or 15% down. Change number 2 is the increase in the limit for high ratio mortgages from $1 million to $1.5 million. And these mortgages can also be amortized over 30 years. So there's a lot of theories on how people interpret these two changes, but the way I look at it is that the Bank of Canada is giving a clear signal, a clear message to all buyers and sellers. They're saying that, hey, listen, we know we have paused this market over the last 24 months. And yes, we're going to kickstart this market. We're going to kickstart this market by doing the opposite of what we did to halt this market, which is to drop interest rates. However, before we do that, we want to prepare you, future buyers, to get ready for a higher mortgage payment. And the way we're going to enable you to afford that higher mortgage payment is by changing these two rules. Will property prices change? Yes, but they will change because of these mortgage rules that will enable more buyers to come into the market and purchase. Overall, if you look at it, people will be carrying more debt. They will take longer to pay off their mortgages. Yes, that is a con. However, for some buyers who actually have good income but haven't been able to get together that down payment, it will bring those buyers into the market. If you're a buyer who actually has the down payment, so you have 20% or more, and you have the income, you are qualified, especially in that 1 million to 1.5 million range, I would suggest that you buy sooner than later, because you will have more competition coming into your segment of price point after December 15th. Now the banks are going to take a little bit of time to get all these rules kicked in, but people are getting prepared that the ones who could not afford a home that was 1.1, 1.2, all of a sudden are going to be able to afford it, which means that there will be more competition. Now, I'm not talking about there's going to be intense competition, but there will be more competition. When there's more competition, you would suspect that home prices will start to increase. Now, if you're a seller who's in that price point, I would say you should wait a little bit. If you're planning to come on the market in this last quarter of 2024, it makes sense for you to wait. I have a couple of listings that were going to come up in Oakville, and I told those sellers to wait, because most likely if they're in the $1.1 to $1.5 million range, they will have more buyers qualified to buy their home than there are at the moment. History tells us that anytime the government has intervened into the real estate market, their changes have affected pricing. If you go back to 2017 when the foreign buyers tax came in, we saw significant changes. We saw prices drop, and it took about a couple of years for the prices to come back. During COVID, we saw record low rates. People were staying home. They could not go anywhere. So the only thing they could spend money on was real estate, and the prices jumped. Now, what did that cause? Well, that caused inflation to get out of hand. And how did they control the inflation? By increasing the interest rates. And what happened to the real estate market? It slowed down. So even if you've been following the history of GTA real estate for the last 7-8 years, you can see that anytime the government of Canada intervenes into the real estate market, they're going to affect it. I personally feel that these changes will have only short-term benefits for your average buyer in the GTA. In the longer run, these changes are not good for your average Canadian. If you look at it, most people will be carrying a larger debt. Most people will be taking longer to pay off these debts. Who is it going to benefit? Well, it's going to benefit the banks for sure, because they're going to be giving out higher mortgages and collecting higher interest amounts. The mortgage insurance companies who insure these high ratio mortgages are also going to get richer because those premiums are going to get fatter and fatter. What we really need is more housing starts. And what we really need in the GTA, especially in Toronto, is this land transfer tax to just go away. I do not understand why someone, if they're buying $1 million property in Toronto, has to pay $32,000 for land transfer tax. I mean, really, what are we transferring? It's not that you're taking a property from King Street and putting it on Richmond Street, or if you're in Oakville, taking a property from Glen Abbey and putting it in West Oaks. None of that's happening. This is just electronic. I do not understand why does the city of Toronto and other municipalities in the GTA collect so much land transfer tax. I think it should not be more than $1,000, maybe $2,000. And again, there should be a limit. If a property changes hands more than once in 10 years, you got to give these buyers a break.
Aww.
That's how you make housing affordable. $32,000 is cash you need on $1 million purchase in Toronto on top of your down payment. That's a lot of money. So if you're a buyer who can actually afford the payments at the moment, especially in the $1 million to the $1.5 million range, I think you should get into the market sooner than later. Sellers who are looking to sell properties in the $1 to the $1.5 million price point should wait. They should come into the market maybe the first quarter or second quarter of 2025, because I think you will have more buyers qualified to buy your home. If you're a seller who wants to start prepping their home for sale next year, well, we have a great video on how to get the best price for your home. I've attached a link for that video in the description. If you're a buyer and you're wondering how to start the process of buying a home, I've attached a link for a video on how to prep yourself for buying a home in the GTA. So if you found this video informative, please subscribe to our channel, click on that bell icon, like this video, and I'll see you in our next video about real estate in Oakville and the GTA. Thanks for watching.